Good afternoon, students. Welcome back to the session on advanced accounting. So we were discussing accounting standards, and in the last session we covered a bit of accounting standard 17 that was about segment reporting. So we'll continue with this standard today, and I'm just hoping that you would have revised whatever we covered in respect of AS 17. But we'll do a quick recap of this segment report. So first of all, talking about segments, segment we can say is one of the major component of the business or the entity which is capable of generating its own inputs, it's capable of generating its own revenues, it has its own different costs. So that means in terms of the financial numbers, this happens to be one of the significant component or a separate significant component of the entity. But as regards the segments which are required to be disclosed, which are required to be reported, not all the segments get reported in the financial statements. Only some of the segments get reported for which the standard gives us the criteria. So we have a quantitative criteria, or we can say we have certain criteria which are based on the numbers, on the basis of which we select whether the segments will be reported or not. So the first criteria is about the revenue. That means the 10% of the revenue of the entity should be there in respect of the segment which is getting reported, at least. Second criteria is on the basis of total assets of the entity, and third criteria is on the basis of profits or losses of the entity, for which we had certain discussions, and we also understood that this third criteria, we can say, this third criteria is a bit tricky when we need to consider the absolute figures. Further, when the segments get selected on the basis of this quantitative criteria, we also need to do a test whether the segments which have got selected for reporting, they are touching at least 75% of the total revenues of the entity or not. If yes, then it's fine. If no, then we need to add some more segments. Even though they don't meet one of the criteria of revenue or profitability or the assets, still some more segments will have to be selected till the time it touches at least the 75% of the total revenue of the company. And once this is done, then we have in place the segments which are required to be reported. Now, as regards these segments, let's understand some of the disclosures which are required to be given. Now, for the users of the financial statements, one of the important disclosure which we can think of is about the financial numbers, isn't it? So if we show the user the amount of assets, the amount of liabilities, the amount of this P&L, in a way, means the amount of revenues, amount of expenses, amount of profits or losses, which pertain to a particular segment, then the user will be able to make out in a better manner as to whether the segment is generating good profits or not, or the net worth of the segment, or you can say the asset size of the segment. A better understanding will be available to the users of the financial statements in such a manner. And largely, this is how the segment disclosures are required to be given. We'll also touch upon today in respect of one of the illustrations as to how these disclosures are required to be given. But there are certain more aspects, or you can say there are certain more concepts that we need to consider before we get on to that segment disclosure. So let's quickly get on to those concepts. Now, as regards the revenue which are required to be reported in respect of that segment, which becomes the reportable segment. So I'm saying the segment which becomes the reportable segment will have to disclose its revenue, which is called as segment revenue. Similarly, the segment which gets selected for reporting, or you can say the reportable segment, will have to disclose its assets, which is called as segment assets. Similarly, we'll have segment liabilities. Similarly, we have segment expenses. Similarly, we'll have segment results. So we have all of these terminologies in respect of segments. But when we talk about all of these segments, We are talking about only the reportable segments. Okay. So now let's try to understand what all ingredients are required to be covered when we capture these disclosures in the financial statements. So starting with the segment revenue. So that means when the segment will be reported and the revenue of this reportable segment is required to be disclosed, what all will comprise of this revenue. Okay. You can also refer page number 1.52 for this. Okay, so now first part is about the revenue which is attributable to this segment. So that means out of the total revenue of the company or the entity, the portion of the revenue which pertains to this segment is required to be disclosed. Directly attributable means something which is in relation to this segment only. Second, the relevant portion of enterprise revenue that can be allocated on a reasonable basis to a segment, and revenue from transactions with other segments of the enterprise. So now over here, there are a couple of things which we can understand. One is the external revenue. Means if let's suppose there's an entity which has got three segments. There's an entity which has got three segments. S1, S2, S3. Okay, there's an entity which has got three segments. Now, this entity will be making sales, and whenever we talk about sales, effectively these segments are the only one which are making the sales, because we are not limited to reportable segments. We are talking about all the segments. Yeah. So now, there are two ways sales can be generated for this entity. One way is that this entity is making sales to a third party customer. Okay, S1 is selling to a customer, C1. S1 is also selling to C2. S1 is also selling to C3. Yeah. Similarly, S2 may be selling to C3. All of these sales which the entity is making outside the entity are what? External sales. Yeah. So definitely the sales which S1 would have made in respect of the external parties will get covered over here. But another point which is very important to understand is about the internal revenues. Many a times, as you would have seen in case of departmentalization, that one department may be selling goods or services to another department, for which one department will also be charging the amount. So same is the case over here. It may happen that one segment is selling to another segment. If you look at the total revenue of the entity, this revenue will not be considered. Why? Because this is internal to the entity. But when it comes to the disclosures of the segment, this internal revenue is also required to be disclosed. Okay, this is also required to be disclosed. Further, while giving this disclosure, wherein external and internal sales are required to be captured, there are certain things which are specifically not required to be covered. First, if there is any extraordinary item, that will not get into the segment disclosure. Why? Because extraordinary item is something which is pertaining to the entity as a whole. It's not specific to the segment. So it will not form part of segment revenues. If there is any interest or dividend income, including interest earned on advances or loans to other segments, unless the operations of the segment are primarily of a financial nature. Third, gains on sales of investments or on extinguishment of debt, unless the operations of the segment are primarily of a financial nature. Okay. So what are the exclusions? First, extraordinary item. Second, interest or dividend. And over here we are talking about interest or dividend income. Yeah. And third is gain on sale of investment or extinguishment of debt. Okay. So if there is any income in the nature of these three, this will not get covered under the segment revenue. Yeah. Moving further onto the segment expenses. Now, similar to what we have seen in case of segment revenue, there are certain items which will get covered under segment expenses. Let's understand those. Expenses which relate to the external parties, means if there are any purchases, if there are any expenses incurred in respect of transactions outside the entity. Okay, so those will get covered. Expenses. Yeah. Now, similar to what we saw in case of revenue, now let's suppose if S1 is selling to S2, so S1 will give the disclosure in its segment revenue, but for S2, it's not a revenue, it's an expense. Yeah, and this expense is not with a party which is outside the entity, it is internal to the company. So that's why if there are any such internal expenses, those will also get captured. Here again, we have certain exclusions. Extraordinary items need not be the income always. They may be expenses. So they will not get covered. If there is any interest expense, that will not get covered. Now, gain was excluded from revenues. So if there is any loss on sale of investment or loss on extinguishment of debt, that will also be excluded. Income tax expense. Income tax expense, that will also be excluded. And if there are any general administrative or corporate expenses or HO expenses, means those expenses which relate to entity as a whole, which are in a way not directly attributable to a particular segment, which are generally the corporate expenses and which are not allocable to a particular segment, those will also not get covered over here. Okay, for this you need to remember that these are the ones which are not allocable. Yeah. So this was about segment expenses. Now, next aspect is about the segment result. Now, how do we determine segment result? It's very simple. What is segment result? Segment income less segment expenses. Yeah. In a way, you can say it's the nomenclature which is used for profit or loss for a particular segment. Okay. Yeah. Moving further on to the segment assets. Onto the segment assets. Now, in respect of segment assets, once again, what do we need to consider? Every segment must be operating with some infrastructure in terms of PPE, in terms of intangible assets at times, in terms of various current assets which it will be having. For example, segment will have its debtors, segment will have its other current assets, segment will have its GST input credit. Yeah, so there are a whole lot of assets which a segment may be having. And it's very easy to identify them. And generally, in respect of a segment which becomes a reportable segment, such financial information is easily available. And mostly companies capture this data separately. Means companies capture separate trial balance, separate books of accounts for all of these segments. This is something which is very commonly found. And that's why when it comes to the disclosures, segment assets are required to be disclosed, wherein all the assets which pertain to a particular segment will be captured over here. But once again, we have certain exclusions. So let's understand the exclusions. Income tax, if you remember, was excluded from the segment expenses. Similarly, if there are income tax assets, those will also not form part of segment assets. Why? Because these do not pertain to a particular segment. Income tax is something which is specific to a company. Income tax is not something which will arise on a particular segment. Yeah. So that's the rationale. If there are certain assets which are general or meant for HO only, okay, corporate assets, and which are not easily allocable to a particular segment, means it will be inappropriate to allocate those assets to a particular segment because those are meant for the purposes of corporate only. Those are not meant for a particular segment. So those should be excluded always. Yeah. Similarly, when we talk about segment liabilities, here we are excluding income tax assets. Here we need to exclude income tax liabilities. This will become an exclusion. Yeah. And over here, the borrowings need to be excluded. Why? Because those are something which are pertaining to the entity as a whole and not really to a segment. Yeah. Those are generally not specific to a segment. So that's why these are some of the exclusions. Okay. Now I think we can pick up some examples with the help of which we will get more clarity around some of these exclusions, some of the inclusions, and how all of these disclosures are required to be given. Before this, Sonu has a query. Sonu is asking, so what do you mean by extinguishment of debt? Extinguishment of debt means when the debt is foregone. For example, a company has taken a loan of say 50 crore from a bank. Yeah. But this loan is not repaid. Eventually, settlement is done with the bank that the company will pay only 45 crore and 5 crore is foregone by the bank. This is called as extinguishment of debt. Now, in this deal, company has earned 5 crore rupees. So it's a gain. Similarly, at times the company may be required to lose out by paying higher, okay, in terms of restructuring. Kanishk is asking, sir, what's the other word used for gain on sale of investment? You can say profit on sale of investment. Tanu is saying, are we talking about disclosures? Yes, of course. See, this standard is all about disclosures only. This standard doesn't deal with recognition or measurement. Okay. Saurabh is asking about income tax assets. Are those limited to advance tax? Yes. Advance tax, deferred tax, all of these are income tax assets. Yeah. They will always be excluded from the segment disclosures, because you can't call them as specific to a particular segment. So I think we can now move to illustration number 3 on page 1.60. Messrs XYZ Limited has 3 segments: X, Y, and Z. Okay. So we can also see this. XYZ Limited has got 3 segments: Z, X, Y, and Z. Total assets of the company are 10 crore. Segment X has 2 crore assets. 2 crore. Y has 3, Z has 5. Yeah. And in these assets, deferred tax has also been included, including DTA. And what is the amount of DTA? 0.5, 0.4, 0.4, and 0.3. Yeah, so this is the amount of DTA which is already included in this now. The accountant contends that all the 3 segments are reportable segments. Okay, so over here again, what do we need to check? We need to check that whether all these 3 segments are reportable or not. And I think this is very, very simple. Now, some of you may have a concern. What's the concern? That for us to assess whether the segments are reportable or not, we need the information about revenue. We need the information about profit or loss, which is missing. Yeah, only the information about assets is given. So how do we determine it? So in case only the information about assets is given, so that means we need to analyze only on the basis of this criteria. We don't need to get on to other 2 criteria, because this is the limited information available to us. Correct? Yeah. So with the help of this, can you tell me which all segments will become reportable and why? I think this is quite simple. Quickly. And this will also give us some clarity about the segment assets or some of these principles about segment assets, revenues, expenses that we have discussed. Yes, quickly. Sushil is asking about reportable segments. Reportable segment means those segments which will be reported, for which the disclosures will be given. I think you might have missed the last session, and that's why you may have this query. Huh? So I suggest you just revisit the last session. Huh? Yes, quickly start sharing your responses. Okay, Vijay is saying all the segments will be reportable. Meman is saying, okay, Meman is just still working around. Okay, Gadisiri is saying all the segments are reportable because they hold more than 10% of total assets each. Kanishk is saying they are all reportable because they hold more than 10% of total assets. So let's understand about the assets which are required to be considered. Okay. Currently, if you look at the total assets of the company, the total is 10. Okay, so you can say total is what? 10. But for the purposes of segment, do we include the amount of tax assets? No. So what should we do? We should exclude this amount. What is the total of this? 1.2. So after excluding DTA, what is the amount of total assets? What is the amount of total assets? 8.8. Okay. And for every segment, we can check. For every segment, we can check what is the amount after excluding DTA. So this will be 1.5. This will be 2.6. This will be 4.7. So when we will perform this check of segment having its assets more than 10% of the total assets, on which number we will apply this? Do we apply this on this amount? On this amount? The answer will be this amount. Okay. Yeah. So we will not be considering this. We will be considering this. Clear? And if we consider this, then I think it's clearly visible that the amount of assets of every segment is greater than 10% of the total assets. Yeah. That's why all the segments over here will become reportable segments. Clear on this? Yeah. Okay, Sonu has given the same answer. Then I can see a lot of responses. Rakesh, I think, had the same answer. Mansha had the same answer. Vijay is asking, sir, all the segment reporting can be seen in the annual report of a company? Yes, definitely you can see that. Pratibha was giving the same answer. Okay. Pooja had the same answer. Great. Sandeep had the same answer. Very good. So I think all of you have the same answers. Let's move further. We can move to next illustration now. Illustration 4. In this illustration, we are required to give the disclosures. So it says, prepare a segmental report. Segmental report means the disclosure in the financial statements for publication in Diversifiers Limited. Means in this company, we are required to give the disclosure of segment. Yeah. We are given following details of the company. which has 3 divisions and the head office. Okay. So first division is forging shop division. Then we have bright bar division. Then we have fitting division. Sales, the information related to sales, I think, is given in the first table. Then in the second table, we have some more information wherein the information of HO is also covered, which includes operating result, costs, assets, and the liabilities. Yeah. So now, on the basis of this information, what is it that is required to be done? Disclosure in the financial statements. I think once we do this, you will get some clarity as to what all disclosures are required to be given, and all of these aspects that we have discussed, you'll understand as to how this information is put down in the financial statements. Okay, so now when we begin, so we have diversifiers limited segment disclosure. Okay, you can call it as segment disclosure or the segmental report, the way it is required by the question. Now, in this case, the information that we have, it talks about 3 divisions. Yeah. It talks about 3 divisions. And other than the 3 divisions, it also gives the information about HO. Yeah, it also gets the information about HO. Now let's try to understand the structure for any organization first before we get on to this disclosure. For any company, which will be running its operations through various divisions or the segments, yeah. So let's suppose this company has got 3 divisions, 3 segments, S1, S2, S3. Now, what is the purpose of having these divisions? To carry out operations, which will generate revenue, which will generate profitability. Yeah. And that's why every segment will have its own assets as well as liabilities. But over and above that, generally what we also see in case of a company is that it will always have head office, or we can say corporate office. And generally the activities of the head office or the corporate office are not directed towards generation of revenue. Yeah, if you look at the larger objective of the organization, it's definitely to earn income. There's no doubt about it. But the activities on which the HO or the corporate office focuses is not really related to day-to-day sales, or you can say incurring day-to-day expenses. HO or corporate office is generally engaged in some sort of activities which will help the organization towards meeting its long-term objective. Or in a way, you can say to facilitate all of these segments to run their business. Because who is running the business? Segments are running the business. Now, for them to run in an effective manner, a separate, you can say a structure is there in the form of head office or corporate office. For example, if they will need funds, this office will provide. Yeah, if they need any sort of technical support, any sort of infrastructural support, this office will arrange. Yeah, so this office, or you can say this setup or this part of an organization generally doesn't generate revenues. Yeah, but it's an important part of that. It's an important part of the entity. But when it comes to the segment disclosures, will this become a separate segment for an entity? The answer is no. It doesn't become a separate segment for the entity. But yes, there are some parts of this office which can be allocated to all of these segments. And there are some parts of this office which cannot be allocated to all of these segments. So this is something which we'll understand while giving this disclosure now. Yeah. So now, what are the disclosures that are required to be given? Segment revenue, segment expenses, segment assets, segment liabilities, segment result, all of these. Yeah. Okay, so let's begin with the segment revenue. So we have particulars, then we have divisions. Forging shop, then we have bright bar, then we have fitting. Yeah. Then we need to give the total, or you can say console picture. This is something which will capture the console picture. Okay, so now if we begin, what do we find? Certain sales have been made by 4G shop to bright bar 4575. Okay, so these are what? Inter-segment sales. Will these get included in the segment disclosure? The answer is yes. So now, first of all, when we give the segment revenue, what do we include? External sales. External sales in this case are domestic as well as export. Okay, and then we have inter-segment sales. Then we have inter-segment sales. So for forging shop, it was 4575. It was 4575. Yeah. Then we have other sales 90 and 6135. 90 and 6135. 90 is domestic, export is 6135. So total becomes 6225. Yeah. And if you look at the total revenue, so this will be 10800. Total revenue for this particular segment. Yeah. Okay. Moving further onto the bright bar division. So it has sold to Rwanda 300 and to fitting 45. So export is 300, domestic is nil, this is 300 and this is 45. So this becomes 345. Correct. Moving on to fitting. So fitting has made sales of 270 and there are only exports. So this is 270, this is nil. So this is 270. Correct? Yeah. Okay. Now, as far as information related to sales, everything has been captured. Now, what is the next aspect that we need to cover? We need to move on to the total. Now, while we put down this information, we need to be wary of the fact that certain inter-segment sales have been captured over here. But in the consolidated picture, means in the company level picture, will this get captured? The answer is no. So that's why we'll have to bring in one column for inter-segment elimination. Inter-segment elimination. Yeah. Here we don't have any elimination. This is nil. But over here, the total of these two will have to be eliminated, because if these are sold to divisions, then these are also the purchases for the divisions. So we will exclude these two. 4620. Okay. And the total 96705. This is 90. This is 6705. This becomes 6795. And in this case, after elimination, do we have anything? No. This should become 0. And this will become 4620. And after elimination, total revenue of the entity will be 6795. So this is the segment revenue disclosure. So this is how disclosure of segment will be given in respect of revenue only. Clear? Clear on this? Any questions in respect of this disclosure that we have given? Please let me know. I'm just hoping video audio is all clear. Yeah. Okay, so now moving further. The next part which we need to include in the disclosures is about the segment expenses. So let's move on to the expenses. If we look at the information in the question, expenses which are given are only those which do not form part of expenses of the segment. Means head office expenses, interest costs, do we include that? No, these are the exclusions. So that's why in terms of the segment expenses, do we have anything? No. So they get excluded. So what can we give? We can give the segment result. Because segment is a result, sorry, the information related to segment result is already given to us in the question. Segment result is something which we have to determine. And how do we determine this? Segment revenue minus the segment expenses. But over here, we will not determine. Why? Because the question itself has given this segment result. So this is 240. This is 30. This is negative 12. Means it's a loss. And all in all, this is 258 at the entity level. Yeah. Now, there are certain expenses which though do not relate to the segment, but still those are part of the expenses of the entity, HO expenses. So we will have to cover that. HO expenses. HO expenses, where do we take them? Over here in the total amount. So we exclude that. What do we get? 114. 114 will be what? Operating profit. Operating profit means profit which is generated from operations. From this, we need to exclude the interest. Interest expense, if you remember, doesn't form part of segment expenses. So we will exclude this from the total amount, 16. So what do we get? 98. So this 98 is what? Profit before tax. Yeah. So this is the information in respect of P&L of this company. Now, let's understand this. Okay, let's spend some time on this disclosure. See, in the financial statements of this company, when it will come to the P&L, only this column will be available. So if any investor, any user of the financial statements would review the information which is available over here. So what will he understand? That the company has generated sales of 6,795 and company has earned a profit of 98 out of this. Yes or no? Yeah. But if we give this additional disclosure over and above this information which is available in the P&L, and in a way this is reconciled to the P&L. Can you see this? All these numbers are in a way reconciled to the P&L. So eventually we are also giving the profit which has been reported in the P&L in the form of PBT. Does it help the user of the financial statements to understand about the organization, about its business, about its operating activities, about its operational profits or losses in a better manner? The answer is yes. The answer is clear yes. Why? Because we can make out very clearly that this division, fitting division, is making losses. And these are not the losses after interest or HO expenses. Even at the operational level, this is making losses. So operationally, entity will have to check its viability. Entity will have to analyze how to make the improvements in this particular division. Yeah. So if any corrective action is required, entity will be in a better position now with this set of information. Correct? Yeah. Okay, Ganesha is asking, sir, why did we exclude 4620? Why did we exclude this? Okay, this part. See, this is sum total of sales which were made by one segment to another segment. You can say sales made within the organization. At the company level, can we give the sales which are made within the organization? Tell me, can we give the sales which are made within the organization? Give means, can we put that information in the P&L? The answer is no. So that's why when it comes to the total or the consolidated picture of the entity, this will have to be excluded, and that's why it's been excluded over here. Clear? Now, this was about the information related to segment revenue, segment expenses, segment results. Moving further on to the segment assets and liabilities. So now about the segment assets and the liabilities. So we have some information available in the question. First is about the fixed assets. Okay. So if you look at the fixed assets, though this terminology is changed now, so PPE is what we call it. 300 is for first division, 60, 180. There is nothing which is intercompany. So I think this is 540. Then we have another set of information in respect of net current assets and long-term liabilities. This is 180, 60, and then 135. This is 375. So if you look at the total, it's 480, 120, then 315, 915. But if you look at the total assets of the entity, those are not 915. They also include assets of the HO, which can't be allocated to the division. So we'll have to bring in unallocated part now over here. Unallocated corporate assets, which belong to the corporate only, which cannot be allocated to this. And what is that amount? 75 plus 72. So this is 147. So this becomes 1062. Yeah, total assets of the entity 1062. Correct. Then we will give the information about segment liabilities. In terms of segment liabilities, we have long-term liabilities, which are specific to the segment. 30, 15, then 180, which makes it 225. But at the console level, once again, we have certain unallocated liabilities of the head office. So we'll say unallocated liabilities of head office. What is that amount? 57. So all in all, what do we have? 282. So this is the amount of total liabilities at the company level. This is the amount of total liabilities at the company level. Yeah. Now, once again, if you were the user of the financial statements, you would now understand that how relevant, how important is this disclosure. Because if you were looking at only this column, please understand, if you were looking at only the last column, your analysis, your understanding about the business, about the size of the company, about the assets of the company will be very, very limited. But now with this additional information in place, your understanding about the business is quite comprehensive. Yeah. Any questions, any doubts that you may have, please let me know. Are you clear on this? Yes, quickly, yeah. Clear on this? Okay. Now there is one more aspect of the standard. Let's try to understand that. In this illustration, so I'm just taking the help of this information only. In this illustration, as you would have seen, certain disclosures were given by the entity. And these disclosures were given by the entity in respect of its segments. Correct? Yeah. If we analyze the segment information, what do we find? That the segments have been given by this entity. Segments have been reported by the entity on the basis of its business information. So this segmental information is based on nature of business. However, there was another way for this entity to give the disclosure. If you remember, this company was making sales in India and outside India. Remember? If you remember, this company was making sales in India and outside India. This company could also have reported its segments on the basis of geographies instead of disclosing them, reporting them on the basis of nature of business. Correct? Yes or no? Yeah. Now comes the question as regards the basis of giving the segment information. Means, how do we decide whether the information in respect of segments should be given on the basis of nature of business? In which case, we will call the segments as business segments. If we give the information on the basis of nature of business, something like this, then what are these segments called as? Definitely they are called as reportable, but these are business segments. And in case we give the information on the basis of geographies, then what do we call those segments as? Geographical segments. Now it is for the company's management to decide. Yeah, so I'm saying there's no fixed criteria over here. It is for the company's management to decide which basis will be the most appropriate one. Which basis will give the better reflection of its financial statements, or which basis of reporting the segments will give the better information, better understanding to the users of the financial statements. Correct? Yeah. Now, we have understood that as regards the basis to be chosen for reporting the segments on the basis of nature of business or on the basis of geographies is up to the discretion of the management. Yeah. But even though this discretion is available to the management, standard has certain more requirements. Standard says that the management has to choose. That the management has to choose the basis for reporting segments. Okay. Let's suppose the management has decided, that they will give the disclosure on the basis of nature of business. Yeah. Let's suppose this is what management has decided and they have given this disclosure. In this case, standard says that if the management does this, then this business segment will become primary segment. Yeah. So this will be called as primary segment for this entity. And even though they are giving these disclosures on the basis of nature of business, they will also be required to give additional disclosures in respect of geographical segment. In which case, geographical segment will become the secondary segment. This will become the secondary segment. I am repeating my point now because this may have created certain confusions. First of all, we need to understand that the basis of choosing the segments, whether it's based on nature of business or on geographies, it's up to the discretion of the management. Yeah. Let's suppose management has done this and management decides that they will report their segment information on the basis of nature of business. Then the standard says, in this case, management will give all the required disclosures considering business segments. But some limited disclosures, are also required by taking geographical segments by this organization. Means this will be over and above business segment disclosures which the entity will give. And let's suppose it's other way around. Let's suppose entity says, okay, I will consider geographical segment for giving the disclosure. In which case, geographical segment will become primary segment. Or in a way you can say, management says, I will consider geographical segment as my primary segment. Then for geographical segment, all the disclosures will be given, and over and above this, business segment will also require certain disclosures. Why? Because in this case, business segment will become secondary. For the secondary segment, some limited disclosures are required, but disclosures have to be given for sure. Clear on this? Yeah. Clear on this? Okay. So now, continuing on this part. So we'll continue on this part only. In this illustration 4, we will try to understand that after giving all of these disclosures in respect of segment assets, segment liabilities, segment results, segment revenues, segment expenses, by taking business segments as the primary segments, what all additional disclosures are required to be given by the entity in respect of its geographical segments. Yeah. So in this case, this disclosure was in respect of primary segment. Over and above disclosures in relation to the primary segments, some more disclosures are required to be given in respect of secondary segment. Additional disclosures in respect of secondary segment, which this company will be required to give. And what is this secondary segment? Geographical segment. What is this secondary segment? This is geographical manner. Okay. Yeah. So let's understand how these segments will be created. How these segments will be created. So first is about the domestic market. Now the question has got limited information, and this information is available only in respect of sales. So the information that we will give will be in respect of sales. Yeah. And these sales will be the external sales only. So first is the domestic sales. Yeah. Then we have export sales. Now export is not only to one country. Export is to various countries. So either we can say India and outside India, or we can go country by country. Yeah. So we can say export sales by forging shop division. By forging shop division. We don't know the country's name over here. Second was export to Rwanda. Third was export to Maldives. And then, of course, the total or the consolidated picture. This is required to be captured. So in case of domestic, what do we have? 90 as the revenue. In case of this export, this was 6135. To Rwanda, it was 300. And this was 270. All in all, what is the total sales amount? 6795. Now in this case, please remember this disclosure that we have given is called as disclosure for the secondary segment. And what became the secondary segment? Geographical segment. You can say segments on the basis of geographies became the secondary segment. And as I told you, there's no rule which we can take over here in respect of considering which segment disclosure will become primary and which one will become secondary. It is up to the discretion of the management. Okay, yeah. For us, what do we need to remember? That all the disclosures are required for primary segment and limited disclosures are required for secondary segment. Because we will not repeat each and every disclosure by taking geographical segment. No. We don't want to overload the user with the financial information. Otherwise, it will become not very useful for him. Yeah. Idea is not to just overload him or to provide too bulky information to him. Idea is to provide him some additional information which is going to be useful for him for some more analysis. Clear? Clear on this part? Okay, Meman is asking, sir, it means both the segments are required. Yes, both the segments are required. And when it comes to both the segments, here again, what do you need to remember? You need to remember that in respect of both the segments, all the information or full disclosures are required for primary and limited disclosures are required for secondary segment. Okay? All right. So any questions, any doubts that you may have on this, please let me know. Pooja seems to be clear on this. Okay, great. But Pratibha is also clear on this. Great. What about others? Any questions, any doubts? Because with this, we come to an end to our discussion on AS 17. So any questions that you may have on this, please let me know. Because we'll move on to the next standard then. Sharon is asking for the previous slide. I don't have the slides, huh, Sharon? Nitya is asking, sir, in the secondary segments also some disclosures are required? Yes. Rahul is saying, sir, what if the geographical segment is primary? How will the disclosures be given? Then for all the disclosures, you will structure it on the basis of geographies, means segment assets, segment liabilities, segment revenue, segment expenses. In the given information, in the question, we didn't have much of the information on the basis of geographies. So whenever the question will want you to take geographies as primary, it will also provide you that information. Currently, that information was not available. Vijay is asking, sir, whether the management disclosure or not is checked by the auditors. Yes, of course. Right. So any questions on this? Any doubts that you may have? No? Okay, so Pooja is asking for the break and Jay is saying it's understood. All right, so what we can do is we can take a break now because I think in the next 5 or 10 minutes, otherwise we'll have to just start and then take a break. So we can take a break now, and after the break, we will start this new topic. All right, yeah. So we'll start with the new topic AS19 on leases. And in the meantime, if you have any questions, you may please let me know. All right, so let's take a break, huh? Hi, welcome back. So we'll now continue with our discussion. So we were talking about AS19. So starting with this AS19, very interesting topic and very important also, because in terms of some of the standards which we have discussed in the last few sessions, they were largely limited to the presentation and the disclosure requirements. But here comes the standard wherein we are just moving away from those disclosures requirements only. So we'll now be talking about recognition and measurement also. Yeah, in the form of leases. So what do you mean by lease? So let's understand the meaning of lease, through which we will understand as to what is the perspective that we are going to discuss over here. So let's suppose there are two parties, A and B. Yeah. Now, A, let's suppose, has got an asset. Say A has the asset, or you can say A has the ownership of this asset. A has the ownership of this asset, right? Now, in respect of this asset for which A has the ownership, B wants to use this asset. But B doesn't have the resources, you can say, or the funds available to own this asset. So that's why B reaches out to A. B reaches out to A, through which A agrees to provide to B right to use. Okay. A agrees to provide to B right to use this asset. And in return for this, B agrees to pay to A payment, or we can say series of payments. So B agrees to pay to A payment or series of payments. Yeah. Over a period of time. And what is that period of time? Let's suppose it's only for 1 year. It's only for 3 months. It's only for 3 years. So that's the time frame over which this arrangement has been entered into between two parties. So let's suppose this asset happens to be a building. Yeah. So A agrees to provide to B the right to use this building. B will not get the ownership of the building. B will only be using this building. And in return for this, what will happen? B will pay monthly rent to A. Or you can say payment to A or series of payments to A. Yeah. In this arrangement, A will be termed as lessor. Standard gives a terminology to this party A. A will be termed as lessor. Who is the lessor? Party who owns the asset and who transfers the right to use to the other party. And B will be termed as lessee. Who is the lessee? Lessee is the party who will get the right to use the asset and the party which will be making the payments in respect of this asset. Please remember, at no point of time there is transfer of ownership. Yeah. So there is no transfer of ownership. Transfer of ownership is not there. Yeah. And this arrangement will always be for an agreed period of time. For an agreed period of time. This arrangement will always be for an agreed period of time. Yeah. Such type of arrangement is called as lease arrangement, or you can also say rent arrangement. Yeah, it's one and the same thing. This type of arrangement is called as lease arrangement. Clear? Clear on the meaning of lease? Yeah? Are you clear on the meaning of lease? Yeah? Clear on the meaning of lease? Okay. So there are certain more aspects which are required to be considered in respect of lease arrangement. This agreed period of time which we discussed is termed as lease term. Lease term. Or you can say the period of lease. And what is this period of lease? This is the non-cancelable period. For example, A and B entered into an arrangement wherein A has taken premises on lease from B. Okay. A has taken premises on lease from B, and A will make the payment to B. Yeah. Arrangement says that the contract is for 3 years. This contract will be for 3 years. 1, 2, 3. Okay. And in this contract, non-cancelable period is 11 months. Non-cancelable period is 11 months. 11 months is the non-cancelable period. Correct? And if either of the party wants to terminate the lease, now it's a lease arrangement for 3 years. So this lease period cannot be lower than 11 months, means minimum 11 months will have to be served. And if the party wants to cancel the lease arrangement, which is possible after 11 months, 1 month's notice will have to be given by the either party. Okay. So in this case, what do you think will be the lease term? Over to you. In this example, what will be the lease term according to you? Yes, quickly here. What will be the lease term according to you? Yes, I'm waiting for a response. Quickly, what will be the lease term according to you? Okay, Vrinda is saying it will be 11 months. Charu is saying it will be 11 months. Meman is saying it will be 3 years. What about others? I'm talking about the lease period, lease term. What do you think will be the lease term? Pooja, Saurabh, Mohammed, they are all saying 11 months. Sharon is going with Meman. Sharon is saying it should be 3 years. What about others? Yes, quickly. Huh? Harsh is saying it should be 3 years. Yes, quickly. What do you think will be the lease term? Okay. So we have Era Guntla who is saying 12 months. What about others? So let's get to the solution. Huh? So now in this case, what is the lease term? Non-cancelable period. So if we look at this lease arrangement, this contract is for 3 years. But is this 3 years period non-cancelable? No, it's cancelable. So that's why 3 years cannot be the lease period. Yeah. Now, let's understand about the minimum period for which lease term has to be served. 11 months is the minimum period, after which 1 month's notice will have to be given. Means after serving the lease for 11 months, 1 more month will have to be served at least. So this is going to be 11 plus 1 month. So what is going to be the lease term in this case? 12 months, or you can say 1 year. Clear? Clear on this? Moving further on to the minimum lease payments. Now, in the lease arrangement, lessee was making the payments to the lessor. Remember? In the lease arrangement, lessee was making payments to the lessor. Remember? It was either a single payment or a series of payments. It could have been either way. Correct? Now, what do you mean by minimum lease payments? Lease payments mean the payments which will be made by lessee to the lessor. Lessee to the lessor. Now, minimum lease payments means the minimum payments which the lessee will be required to make to the lessor. But this minimum lease payments, which is also termed as MLP, has to be looked at from two perspectives. In case of lessee, in case of lessor. So in case of lessee, what will be MLP? Lease payments, which the lessee will make to lessor plus any residual value guaranteed by or on behalf of the lessee. Any guaranteed value by or on behalf of lessee. Means if in the arrangement lessee is making the payments to the lessor, that will become MLP. Plus, if lessee has guaranteed that after the lease term is over, certain residual value of the asset will remain. If the lessee has guaranteed certain residual value of the asset, which asset? Which has been taken on lease, then it will also get added to the MLP. Okay. Now, whenever we will compute MLP from the perspective of lessee, what would it include? Lease payment or the guaranteed value by the lessee. Correct? However, if we will compute MLP from the perspective of lessor, then it will be certain number which is going to be different from the one we have computed over here. Let's understand what would it become. In this case, it will be this A plus B, this B plus C. Now what is going to be the C? C means any residual value which is guaranteed to the lessor by an independent third party. Any residual value guaranteed to the lessor by a third party. Third party means other than lessee. Third party means other than lessee, and this has not been done on behalf of lessee. Okay, clear? So whenever MLP will have to be computed, MLP will be different for lessee and lessor. MLP will be different from lessee and lessor. Yeah. Okay, so now moving further. So now I will need your attention. I'm sure you are attentive, no doubt, but some of you who may have some doubts, some of you who may have some confusions, please leave it aside, because I'm going to discuss one of the most important part of this standard with you. Okay, this is about types of lease arrangements. So far we have discussed what is a lease arrangement and certain concepts related to lease arrangement. Means who was the lessor, who was the lessee, what is the lease period, what is the lease payment, what is minimum lease payment, all of these aspects we have discussed. Now we need to understand about the types of leases, because standard says leases could be of two types. Okay, it could be of two types. Let's understand these two types. Okay, so let's suppose there is a laptop which has a market value of rupees 1 lakh. Laptop having a market value of rupees 1 lakh. Yeah, this is the asset under consideration. And we have two parties, A and B. A and B. Yeah. A is the owner of the laptop. A is the owner of the laptop. And B is the one who needs this laptop for some period of time. For 3 months. B needs this laptop for 3 months. So what would B do? B will reach out to A. And B is asking for this laptop on rent from A, which A has agreed. So A has agreed. A has agreed to transfer right to use this laptop to B. A has agreed for the right to use. Who will get the right to use this laptop now? B. So laptop will be in the possession of B for next 3 months. And in return, B will make payment of monthly rent. B will pay monthly rent to A. B will pay monthly rent to A. Correct? Okay. Now, in this arrangement, if you'll see, what will happen? For a limited period of time, lessee required an asset and lessor was paid for that limited period of time. If you look at this laptop, this being an asset, this will definitely have some economic benefits. Yes or no? Laptop being an asset will have some economic benefits. Who will have those economic benefits? All the economic benefits associated with the laptop will remain with A. Only for 3 months, those economic benefits have been passed on to B. Only for 3 months. But in return, A has also been paid for this. Correct? Let's look at another arrangement. Let's look at another arrangement. Okay. In this arrangement, there's a slight difference. A continues to be the owner of the laptop. B is requiring the laptop. B wants to take the laptop on lease from the lessor, from A, but B wants this laptop for 3 years now. Okay. B wants this laptop to be used for 3 years. Yeah. Currently, market value of the laptop is 1 lakh. Now, this is very important now for you to understand. Currently, market value of the laptop is 1 lakh. And if you look at the laptop, it has got life of only 3 years. Generally, what will you find? That laptop is usable generally for a period of 3 years only. Yeah. After that, it will not be of much use because of the change in technology, because of this change in features sector. Yeah. Okay. Now, B has a problem currently. What's the problem? B wants a laptop for 3 years, but today B doesn't have the resources to buy this laptop. Means B doesn't have this much money to buy this laptop for 1 lakh. Okay. So that's why another type of arrangement has been thought upon. What is that arrangement? It's a kind of loan, or you can say it's a kind of funding. It's a kind of loan or funding. Let me just explain you, and then you will be able to relate to this. Say if B wants a laptop, what can B do? B can go to the market and purchase this laptop for 1 lakh, or you can say A is the dealer. B can come to A and buy the laptop for 1 lakh. Yeah. Wherein it will be a sale and purchase transaction between B and A. But currently B doesn't have the resources. B doesn't have the resources adequate enough to buy this laptop. So B has thought upon a different structure to get this laptop and to use this for the same period over which B would have used this laptop if B would have purchased this asset. What is that period? 3 years. Now B is saying that instead of making this payment upfront of 1 lakh, I will make the payment in installments. That is what is done in case of a loan. In case of a loan, what do? You make the payment in installments. So B is saying, I will make the payment of this laptop in installments. How? I will pay, say, rent of 4,000 per month. I will make the payment of rent by putting this in the form of rent. B will make the payment of 4,000 per month. As a result of which, what will happen? Let's try to understand. Over a period of 3 years, what is the total amount that B will pay to A? Can you compute and let me know? Over a period of 3 years, what is the total amount that B will pay to A? Quickly, can you tell me what is the total amount which B will pay to A over a period of 3 years? Yes, quickly. Over a period of 3 years, what will happen? 48,000 will be paid in first year, 48,000 will be paid in third year. Sorry, second year, 48,000 will be paid in third year. Yeah. So what is the total amount which B will pay to A? Yes, quickly. Quickly. Great. So I can see a lot of responses. 1,44,000. Over this period, what do we find? 1,44,000 has been paid. Yeah. But by paying this 1,44,000, what has B achieved? Let's try to understand. And I'm sure you'll have questions on this. B will get right to use this laptop for 3 years. If we look at the life of the asset, if we look at the life of this laptop, it's only 3 years. After 3 years, laptop will not be of any use. So that's why entire economic benefit associated with this asset has gone out to whom? To B. There's no doubt that the ownership of this laptop has continued to remain with A, and even after 3 years, the laptop will come back to A. But will it have some value? No, it will not have any value. It will not have any value. So we can say, in a way, all the risks, all the rewards associated with the laptop were transferred by A to B. Yeah, were transferred by A to B, in return for which A has definitely received this amount. Yeah. And what makes us say that transfer of risk and rewards has taken place? Because if you look at this laptop, there is no economic benefit in relation to this which A has enjoyed. It's entirely with B. It's entirely with B. So in this case, what do you find? We find a transfer of risks and rewards. In a way, has been done by A to B. Even though this arrangement is not in the nature of sale or purchase, still B has enjoyed the same benefits which B would have enjoyed if B would have purchased this. Correct? At the same time, we can also see that B ended up making more payment as compared to what it would have done if B would have made the payment upfront. But that is what always happens in case of a loan arrangement. When you don't make the payment upfront, what do? You will take the loan. You will take the loan and you will pay interest on this along with the principal. So in a way, what do we say? That this 1,44,000 comprises of two things. 1 lakh is the principal and 44,000 is the interest. 44,000 is the interest which has been paid by B to A. Yeah. Now you may have a confusion. You may say, sir, we were talking about rent and you are saying it's interest. I'm not saying it's actually interest. I'm saying in a way it's interest. In a way, is it different from the loan arrangement? Is it different from any funding arrangement? The answer is no. So what is a lease arrangement? Lease arrangement is also a kind of funding arrangement. In which case, one party reaches out to B and agrees for an asset to be used and in return makes the payment. If in such arrangement, transfer of risks and rewards also takes place. If in this lease arrangement, transfer of risks and rewards takes place, then such a lease arrangement is called as finance lease. Then such a lease arrangement is called as finance lease. So the given arrangement that we have seen is an example of finance lease. What is a finance lease? A lease arrangement in which transfer of risk and rewards associated with the laptop or the asset takes place. Ownership doesn't get transferred. I'm not saying ownership gets transferred. No, only the risk and rewards get transferred. However, if in the arrangement risk and rewards don't get transferred, then it will not be a finance lease. Okay, or you can say any lease which is not a finance lease will become operating lease. Other than finance lease. Yeah. Bansha is saying this type of lease arrangement is mostly seen in case of aviation companies. This is right. Yeah. Okay. So now we discussed that leases are of two types. One is a finance lease, second is operating lease. Finance lease is the one wherein transfer of risks and rewards take place. Yeah, transfer of risks and rewards associated with the asset takes place. Any lease which is not a finance lease is called as operating lease. Now, why are these two leases important? Or what is the relevance of classification lease into two types? Because the accounting is different for finance lease and operating lease. Yeah. When it comes to accounting, please remember, in case of finance lease, we'll have lessor and lessee. So we will have to look at the accounting of lessor as well as lessee in case of finance lease. Similarly, in case of operating lease, we will have a lessor and lessee. Yeah. So every time, what do we need? We need the accounting of lessor or the lessee. But the accounting of lessor and lessee will vary depending on the type of lease it is. So in case it's a finance lease, then their accounting will be different as compared to operating lease. Yeah. Now, I'm sure you'll have a lot of questions around finance lease. And I would wonder if you will not have questions around finance lease. Yeah, definitely you'll have a lot of questions. And please understand, finance lease is not yet done. I'm not yet done in terms of the concepts related to finance lease. If one has to ask, what do you mean by finance lease? The broader concept is this, that you need to check whether there is transfer of risk and rewards or not. But you will have this very simple query that, sir, please tell us, how do we test whether the risk and reward have got transferred or not? Okay, yeah. So now we will move on to this question. Operating lease is very simple to understand. Why? Because any lease which is not a finance lease will become operating lease. So that means every time we will have to check whether a lease is finance lease or not. Every time we will have to check whether a lease is finance lease or not. Yes or no? Now, how do we check whether a lease is finance lease or not? So whenever you will have to check whether a lease is finance lease or not, you will always go by the concept of transfer of risk and reward. However, standard also helps you on this. Standard gives you some indicators. Standard says if any of these indicators are available, then you should assume that the lease is a finance lease. Okay. Or the presence of any of the indicators that we are going to discuss now will make the lease as a finance lease. So let's understand all of these indicators one by one. Indicator number 1. Ownership gets transferred to lessee at the end of lease term. Okay, so let's understand. What do you mean by this? Say A and B have agreed that over a period of 3 years, B will use the laptop. Yeah? Or let's say car. Over a period of 3 years, B will use the car. Who owns the car? A owns the car. Yeah? However, today itself, it is decided between A and B that after 3 years, ownership of this car will get transferred to B. For 3 years, the ownership will remain with A. But after 3 years, that means the end of lease term, the ownership will get transferred to B. So in this case, you can understand and you will be saying the same point that, sir, effectively it's what? It's a sale transaction only, because over 3 years, when A is the owner, the asset is with B. And after 3 years, B becomes the owner. So effectively, risk and reward has got transferred to whom? B only. Yeah. So this is first indicator, in which case, even though the ownership is with A for 3 years, but because it is decided at the time of inception of lease, inception means beginning of lease, that the ownership will get transferred to B, at the end of the lease term, it will become a finance lease. First indicator. Okay. Indicator number B, which is called as bargain purchase option. Bargain purchase option. So let's understand what does it mean. Let's suppose in the same arrangement, wherein the car will be used by B for 3 years. Lease term is what? 3 years. After 3 years, car will not get transferred to B. It's not agreed that car will get transferred to B. No. It's agreed at the inception of the lease. Over here, it's agreed that after 3 years, B will get an option to buy if B wants the car. If B wants, B can buy the car at a value which is below the market price. This is called as bargain purchase option. Here again, let's try to understand what has happened. For 3 years, risk and rewards have been with B. After 3 years, B again is getting an option to buy. And if B opts to buy, A cannot refuse, because it's an option with B. And this option to buy is not at the market price. It will be below market price. So that's why this indicator will also make this lease arrangement of 3 years as finance lease arrangement. Clear? Indicator number C. Indicator number C. What does this indicator say? If the asset is of specialized nature, which only lessee can use. Say A owns the asset, forget car. Say A owns the asset, which is a specialized nature, which only lessee can use. Then effectively, what do we say in this arrangement? Who will have the economic benefits? Who will have the risk and rewards? Who will eventually be using this asset over its entire life? It's going to be lessee only. That's why such type of arrangement will also become finance lease arrangement. Clear? Option number D. Lease period substantially covers economic life of asset. Now, this is very, very important now. First of all, we need to understand the difference between useful life and economic life. Car. A may plan to use this car for 5 years. If A plans to use this car for 5 years, what is this 5 years called as? Useful life. This will be called as useful life. But is this car usable only for 5 years? No. Car we know we can definitely use for 10 to 15 years. So what do we say in such a situation? That the economic life of the car is what? 10 years. It's not 5 years. So economic life of an asset is always more than or equal to useful life. Means economic life can never be lower than useful life. Correct? Now, let's understand what does this indicator say. This indicator says if the lease period is for such a period that it substantially covers economic life of the asset. Let's suppose lease period is 9 years. And what do we understand economic life of the car? It's 10 years. Now lease period covers 90% of economic life. So can we say it's a finance lease? The answer is yes. Now in this case, a confusion may arise to you. You may say, sir, how do we define substantially? Does it mean that 90% will be substantial? Is it written anywhere in the standard? No. Standard doesn't say that substantial has to be 90%. This is judgmental. Yeah. But every time, whenever we will do this analysis, generally a percentage of 80% or more is considered as substantial. But what is substantial has not been defined by the standard. For you, don't worry. If the question will ask you, question will specify you what is substantial. So you will not be required to apply judgment. Okay? Clear? Another indicator. Present value of MLP is substantially equal to fair value of asset. Here again the term substantially has been used, but here again two more terms have been used: fair value and present value. Okay, so that's why we will have to just understand these terms first of all before understanding this indicator. For the purposes of our understanding, we can just try to keep this fair value very, very simple for the time being. We can just say that this is the market value. Okay, for the time being. Now, let's keep it very, very simple. Substantially, we have already discussed 80% or more is generally considered as substantial. However, standard doesn't define this. Next comes the question around present value of MLP. Now, what do you mean by present value? I'm sure if you would have covered this financial management, certain such aspects, you'll know about the meaning of present value. Are you familiar with this term present value or not? Quickly, if you can let me know, are you familiar with this term present value or not? Quickly, yeah? Quickly. Are you familiar with this term present value or not? What do you mean by present value? Over to you. Okay, Tanu, Meman, they are clear on this. Saloni also knows the present value. Can you please tell me what do you mean by present value? Jay is not clear on this. Nikita, Pratibha know about this, but can you also let me know what do you mean by present value? Over to you, huh? Quickly. Shubham is asking for point C and D again. Shubham, please focus on point E right now. Otherwise, you'll ask for point E again. Yeah, I'll go back to point C and D. Don't worry. Huh? For the time being, please focus on point E. On this one. Present value. What do you mean by present value? Tell me. What do you mean by present value? Market price is what Sharon says. Nikita is saying current value. Okay, so let's just understand first of all about the meaning of present value. Say you have rupees 100 today. This is year 1, this is year 2, this is year 3. Okay. Let's suppose you invest rupees 100 in the bank today. So what will happen? After 1 year, interest will be earned on this, say at the rate 10%, assuming 10%. Huh? Don't ask me how do you get 10%. I'm assuming. Let's suppose if the rate of interest is 10, then after 1 year, this value of 100 will become 110. Correct? And if this 110 stays invested in the bank, then this will become 110 into 110%. So this will be 110 into 110%, 120. So interest will be added on this. So this becomes 121. Correct? Okay. And if 121 continues to be invested in the bank, so after another year, this will become 133. At the rate 10%. At the rate 10%. Yeah. Now for 100, the value 100, or you can say the current value 100. What is the future value after 1 year at the rate 10%? 110. Or we can say 100 plus the time value of money plus time value of 100 over 1 year will make the 100 as 110, which is also the future value. This 110 is what? Future value. Correct? If we have to check that for this 110, which exists after 1 year, what is going to be its current value? For this 110, which is after 1 year, what is going to be its present value, current value? Then we will have to find the rate of interest. Let's suppose if we consider 10% as the rate of interest. Why? Because over 1 year, we know that 10% is the amount which has been earned, loaded on this value. Then if we have to go back, from this period to this period, then what is going to be the present value of this 110? 100. Understood? What do we mean by present value? Present value means for a future value, If we consider it today's value, by eliminating the time value of money, which gets loaded over this, by eliminating the time value of money, which gets loaded on that, we get the present value. So this 100 is what? Present value. And this 110 is what? Future value. Okay. This is again what? Future value. This is again what? Future value. So if we have to look at present value of 121, it will be 100. Why are we saying 100 again? Because 121 is after 2 years. So over 2 years, we are looking at its present value. Over 3 years, if we have to look at its present value, it's going to be 100. Clear? Clear on this? Now, standard says over a period of 3 years, let's suppose if the arrangement says lessee will pay the rent, say in the first year, lessee will pay 1 lakh. In the second year, lessee will pay 1 lakh. In the third year, lessee will pay 1 lakh. So what do you need to do? Compute its present value, compute its present value, compute its present value. Okay. Present value of all these MLPs need to be computed. Let's assume it comes out to 2.5 lakhs. I am assuming, please don't get into the arithmetics. Let's assume present value of MLPs become 2.5 lakh. Okay. Then the standard says, check the fair value of the asset. Let's suppose fair value of the asset is 2.8 lakhs. Yeah. Now we need to check whether the present value of the MLP is substantially equivalent to fair value of the asset or not. When do we check this fair value? Today only. What do we find? If this is substantially equal, then it will become finance lease, otherwise not. Clear? Clear on this? Clear on this? Now, these are the indicators which the standard has given us. If any of these indicator is present in the lease arrangement, what will you say? You will say it's a finance lease. Otherwise, it's not a finance lease. Okay. Now, I think one of you asked me about indicator C and D. Indicator C says if the asset is of specialized nature. Means asset is of such a nature which only lessee can use. Now laptop is such, it can be used by various parties. But let's talk about locomotives. Only one of the lessee can use this. Nobody else will find it usable. If the lessor goes out to anybody, it will be of no use to that person. So that's why if the arrangement is for such type of asset, it will become finance lease. D. If the lease period, let's suppose the lease period is 9 years and the economic life of the asset is 10 years. So if the lease period substantially covers economic life, substantially means 80%, 90%, 95%. There again, it will become finance lease. Clear? Yeah? Yes, everyone clear on this? Any questions, any doubts that you may have on this, please let me know. Because with this, we are done on the types of leases and we will also be wrapping our session over here. In the next session, we will pick up the accounting of both these types of leases. Yeah, and we'll also pick up illustrations to work bit more on this present value and future value also. Yeah, so that's why for the time being, I'll say you have only 2 things for your homework. First, of course, is revision of whatever we have covered today. And second is just go through those concepts of present value. Yeah, this will help you to understand some of the things which we are going to cover in the next session in a better manner. Clear? Okay. Kushi is asking, sir, in indicator 1, won't it be called as hire purchase agreement? See, please understand, hire purchase agreement is also a kind of lease arrangement which falls under AS9. Yeah. Pooja is clear on this. Shubham is asking, there is another example of indicator D. See, you can take a lot of examples of indicator D. Say, for example, if you go and take a building on lease. Now, the economic life of the building, let's suppose, is 60 years. Correct? Yeah. And you have taken the lease for 99 years. There again, this lease period substantially covers the economic life or not? Yes, that will also become a case of finance lease. Clear, Shubham? Any more questions? Any more doubts? Vrinda is asking about difference between bailment and lease. So let's pick it up in the next session. I don't think this is required as of now. Bijay is asking the timing of next class. Next class will be next Sunday, same time. Okay. Vrinda is asking, sir, in the lease term, 1 month notice should be given prior to 11 months. That depends. Huh? It may or may not be given. Generally, you find it. Saloni is asking, can you please explain point C in case of lesser in MLP? In case of lesser in MLP, see, point C is about a specialized type of asset. Whether you take it from the perspective of lesser or lessee, it doesn't change. It remains same. Jay is clear on this. Very good. Yes, Pooja, next class is on next Sunday. Mancha is asking, ownership still remains with the lesser in the finance lease. Why? What's the reason? Because it's a kind of funding arrangement. Please understand, it's a kind of funding arrangement. That's the reason. If the ownership will get transferred, then won't it become a sale and purchase? Yes or no? So you can say it's a kind of sale and purchase which has been structured in the form of lease. Yeah. Shubham, Khushi, they are clear on this. Pratiksha is clear on this. All right. So I think you all are clear on this. That's great. But please remember, in the next session, it's very, very important you revise, because we have covered a lot of concepts for which accounting is required to be discussed in the next session. And because it's going to be some time in between, so that's why it's very important you revise. Huh? Sonu is asking about hire purchase. Sonu, as you discuss the accounting, you'll understand that all of these aspects will automatically cover the one which you'll see in case of hire purchase also. Okay, and further the standard specifically talks about hire purchase to be included in this. Yeah, clear? All right, so with this we can just end our discussion for today. Thanks to all of you once again for your time and for your wonderful participation. Thanks so much.